Ladies and gentlemen, welcome back to the channel. It's not going to be a huge surprise to you guys that I think Tesla is set up very well for this week. Now, keep in mind, it's going to be volatile. It's going to be a shit show of a week, to say the least. Most days, besides tomorrow, you're going to wake up with huge economic data. And then by the end of the day, you're going to be getting massive earnings almost every single day, basically besides Monday. So there's going to be a lot of volatility, but I do think the path is clearly higher this week for Tesla. And that's what I want to cover here in this video. So first things first, as I've talked about many times now here on this channel, I don't want to sound like too much of a broken record, so we're not going to stick on this topic for too long, but I do think at any moment we're looking at a China pause on tariffs. I think Wall Street has been positioning for that. I think part of why Tesla rallied 10% on Friday was because of that, because of some of that positioning, okay? And we've been green the last 4 days on the S&P. Part of that has to do with some people expecting a pause on China tariffs. I would even go as far as to say the last 4 days, right? Look at this. Tuesday, you were up 2.6%. Wednesday, you were up 1.55%. Thursday, you were up 2.1%. And Friday, you were up 0.72%. These are not small moves, okay? We haven't really gotten much in terms of news that really supports those kind of moves. Usually when you see that disparity, it means somebody knows something, okay? Bet your ass that Warren Buffett and, Ken Griffin and market makers, they know news before it comes out. They have to position for it. You can't have these guys in the dark and boom, big news comes out, good or bad. They tend to know about things before the average investor does. And I think that is the kind of situation that we are finding ourselves in right now. This news could come as soon as within the hour. It could come in the next day. It could come 3 days from now. I don't know exactly when it's going to happen, but I would be surprised if by this Friday, we don't have a pause on China tariffs. Like, if you're going to negotiate in good faith, you would probably want to pause the tariffs first. Correct me if I'm wrong there, but I don't see there being any negotiations without a pause on tariffs. And it looks like Trump and the administration wants to negotiate on tariffs. Okay, it was reported today by Scott Bessent that he's in daily talks with European countries, and specifically tariff talks Asian countries. With those Asian countries, there's progress being had, according to Scott Bessent. So that's long story short of what I think is going to be one of the biggest catalysts of this week. But you also have a whole suite of earnings. And this time's a little bit different because it's not just like, hey, the largest market cap company is going to move the markets the most. Of course, the headline S&P is going to move a lot on Microsoft, on Meta, on Apple and Amazon. But there's two things that I want to tell you. Sure, these are big companies. Amazon and Apple are the most important because they are the most affected by tariffs, and they will be able to tell us a little bit more on what maybe inflation could look like via tariffs. Okay, what their expectations are for actually raising prices. It was reported that Amazon sellers based out of China were already raising prices, about 50% of them or so. Okay, so there's that. But it's also about consumer-related names. Domino's, UPS, Visa, Starbucks, okay? These kind of companies are going to tell us a lot more about the current state of consumers, okay? It's all about the current state of consumption. Okay, a lot of the data that we're going to get, and a lot of the data in general is lagged, okay? CEOs on earnings calls tell us a little bit more about what the current picture looks like for spending. That's what's going to be important this week. That is, I think, what could drive markets. And if that's good, then recession fears are, going to fall. Because right now, hedge funds and institutions are really under-allocated this market. They're not positioned for that upside. If they get a reason this week to be positioned for the upside via a pause on China tariffs, via the consumer holding up. That could spark a pretty aggressive rally, as the S&P is still down about 10% from all-time highs. As far as economic data, like every day there's going to be something important. Friday, you have non-farm payrolls, the unemployment rate, as we talked about in the prior video. On Thursday, you have initial jobless claims. Challenger job cuts is actually going to be huge because, I mean, look at this, right? You spiked to 275,000 last month. This is like, I mean, besides COVID, this is very recessionary kind of levels. This is like almost the peak of 08, 09. So I also think this in and of itself could be a pretty big catalyst. You're expecting that to move up to 290,000, which would be, again, a pretty damn recessionary signal to say the least. ISM manufacturing PMIs, again, that's soft data, not as important. Wednesday, core PCE, personal income, personal spending, and the GDP growth rate for Q1. The first look at what Q1 GDP could look like. You're expecting 0.4%, and this is where I'm a little nervous for this week because the Atlanta Fed GDP Now tracker, again, is negative 2.5%. How do you go from the Atlanta Fed GDP Now tracker at negative 2.5% to expectations of positive GDP for the official number? I think that's very hard to do so, although we will get some GDP inputs coming on Tuesday. Tuesday, we will get JOLTS job cuts, JOLTS job openings. That's massive for the state of the labor market as well. S&P Case Shiller home price year over year and month over month. But the goods trades balance, advanced data for March, so that's still Q1. Retail inventories excluding autos for March, so still Q1. Wholesale inventories month over month for March. And I believe there's some other smaller inputs as well. But those are going to give you a new estimate for Q1 GDP. Again, right before the official estimate comes out on, what was that, Wednesday, Thursday? On Monday, tomorrow morning, all you have is Dallas Fed Manufacturing Index. So that's going to be really the only slow day is tomorrow. Again, maybe we get a China tariff pause headline, but as of now, Monday, tomorrow is going to be the only slow day of this week. Now, before I give you my specific expectations for Tesla stock this week, take a listen to this clip from CNBC. This clip was just minutes before Tesla's earnings came out. Gene Munster actually says that Tesla is a disaster in the short term, but is a rocket ship in the long term. I specifically like his commentary, but just listen to how offsides they were about Tesla earnings. Now, it makes a lot of sense in context to why Tesla has done so well following earnings, up 4.6%. And then you were up 5.37%. Then you were up 3.5%. And then on Friday, you were up 9.8%. The last 4 trading days alongside the S&P, Tesla has done very well. And again, given how offsides Wall Street was versus what we got on earnings, I'm not super shocked that Tesla's doing well. And I think it's going to continue.
Munster of Deepwater owns Tesla shares personally. So does CNBC contributor Bryn Talkington of Requisite Capital, with me both now, as you see. Bryn, you first. There's a laundry list in front of us today of what is incredibly important. What's most? Tariffs, gross margins, brand damage, new model delays, autonomous, Musk. You pick.
You said it right there. I mean, you captured it. I agree with Phil, and I hope Dan Ives is right that he says he's going to focus on Tesla. I think he can focus on 10 different things. We've all seen that. But understand he does what he wants to do because he has these incredibly strong beliefs, whether you agree with him or not. And so I don't know if he would say he would be stepping away from Doge. I think that I agree with Phil. I don't even remotely think that that's a high probability. I think it would be helpful for Tesla investors. But I think really what we want to understand is guidance, is that from a car company where 80% of the revenue, 80% of the revenue comes from cars today, 20% is guidance, and also what's happening in China. Because I've talked about this a lot. China is where the EV, you have to sell cars in China, and there's so much competition. Tesla is still looked at as a luxury brand, but it kind of feels like when you look at all of the other XPeng, Li, BYD, there's somewhat of a race to the bottom of just pushing out all of these cars. So I really want to hear about China. I think Tim Cook, Jensen, and Elon probably have the best relation with the Chinese government. And so I think that's going to be incredibly important in terms of what type of guidance are we going to see in China versus the US or Europe.
So interesting, Gene. It so much underscores as well the current environment that we find ourselves in. That when I present Bryn with a laundry list of issues, she starts with all roads lead to Elon, and then everything else follows after that. Is that to you the most important thing we need clarity on tonight? What Ives has called a code red situation, and whatever other things that he said about Musk getting back to work, so to speak, at Tesla?
I have a contrarian view, Scott, on how this all plays out. I think that tonight it really doesn't matter. And part of the reason why is that if we look back what the company said 3 months ago, CFO talked about 2025 being a pivotal year. Since then, deliveries have been a disappointment. You mentioned that automotive, Phil mentioned that 11.5% estimate. The whisper number is more like 9 or 10%. People know 2025 is going to be a train wreck. And the question is, are they going to have a new vehicle that's going to be launched in 2026? And so I think this is a unique quarter where Tesla's got a lot of room to say a lot of negative things because there wasn't too much expectations about things getting better anytime soon. Estimates still need to be revised. And so I think the conversation about Elon and I think psychologically it's important to investors agree that he probably doesn't say much about it. But at the end of the day, I think that people who own the stock today own it for 2026. I mentioned train wreck near term. I think this is a rocket ship long term. And so they're doing all the right things, but it's going to be costly in 2025.
What gives you the confidence, though, that they can turn this around? It remains unclear as to what level of brand damage has been done. Seems there's been some, and how lasting it might be.
So I'm in the view that this is not a car company. I think that the autonomy piece, understanding Elon's a great salesperson, but it resonates what they're doing. I think if you look at which companies are the most advanced when it comes to physical AI, it's probably Tesla and Anduril. And so when I think about that question about cars, and I think that there's just a higher order that's going on. They got to get the car business. They got to get through the brand damage. That's all going to happen. It may take 6 months. It may take a year, but they're going to get through it. And eventually, customers are going to vote on the merits. Is this the right car for the right price? And I still think that Tesla stands above the competition when it comes to not only range and price, but also what the future car could be like around autonomy. And so that's when I talk about the rocket ship. I'm just a firm believer that physical AI will take longer but be more impactful. And I think Tesla, no one's even close. Elon referred to it last quarter as you need a telescope to see the one who's in second place, and he's right.
Now, with that said, you are heading towards rapidly at this point. Your 200-day moving average at $291.34. Getting above that moving average is going to be critical, okay? If you get above that, then you open the door for the 300s. And honestly, the next level I have marked here is around 325. So getting above 291 could send you into the low to even mid 300s. This week, the 100-day moving average is my target around 336. That would represent upside from Friday's close of roughly 18%. So I'm expecting a big move this week. Now, if the China, pause news does come out, I think Tesla could overshoot that a bit. Maybe hit that 350 level. I wouldn't be super shocked if that happened. And that would be a rally of about 23%. So I do expect a lot of volatility. There's probably going to be a down day or two this week. Don't be surprised if that happens. But I do think all in all, you're setting up for some pretty explosive upside here. Just my thoughts, my opinions, not a financial advisor, not a financial planner. Do not blindly copy or listen to anything that I say, but I am fully positioned for that. If I'm wrong, then I'm going to get smacked this week. Okay, my shares are going to get cut, okay? But if I'm right, well, fully positioned for that. And honestly, like I've said on this channel for a long time now, you need to be positioned for anything that could happen, for the upside, for the downside, anything in between. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.